Okay, I think we are live. What I want to do now is review what we did yesterday before we start trading today. So, this is a review of 31st March 2025. Let's look at the trades that we took. We did them live. Sorry for the EU session, we couldn't do it live, but starting today we'll do it mostly live. I am sorry to say, but I took one trade outside of yesterday live. It was not a massive winner. I hoped it turns out to be, but it did not. It was a very small winner. We'll discuss about it in a while. Okay, what I want to do now is show you the Dow index on a 5-minute time frame. We kind of shorted it at a prior bar high, hoping that we would see the continuation from Friday. That trade didn't kind of work out. We got ourselves stopped out at the highs, and then we kind of wanted to flip the switch. We wanted to flip the idea from going short to long. We found the first opportunity here below a prior bar low. That is where we kind of bought it. I would say we were very early to get out at the new highs, while we could have a massive winner, but it's only after the fact that you realize what could have happened. Just sticking with what we did, looking at the chart on a 15 minutes time frame would give you better clarity of how you could have traded it if you were in the session, what kind of opportunities you might want to look at. Let's see. If you look the Dow on a 15-minute time frame, what I did for you is I have marked some lows where the market just went below those lows by ticks, 5 points, 10 points, 15 points kind of, and then gave you a very good push high. These kind of patterns can be used to trade when you are expecting a strong trend. So this was the opening. We saw a wick candle, we saw a bearish candle, we went below it and closed above the opening range. This was the first opportunity that arrived after the 45th minute of the opening. We went below prior bar and then we gave a push high, and then we went again by a tick or two below to give a push high. If you even notice, this candle just went below this prior bar. This is not exactly the prior bar, but below this low by ticks, and then you pushed high. Even this candle went below. I mean, you can argue that this candle also went below, and I would say yes, it did. And we only moved like 20 points below to give a push high. Even if you look at here, before this push higher, this candle went below the prior bar low, and then we saw a push. This did not happen here, but it happened here. So anytime if you are looking to buy, if you have a bullish view and you want to buy, I would suggest that you buy it below prior bar. Moving on to the Nasdaq, we saw a weak open on a retracement where we saw kind of momentum fading out. We kind of wanted to short above here, got a bad fill, shorted it around the area that I have marked. It went 60 points in our favor, moved our stop loss to break even, but it didn't work. We got ourselves stopped out. And before closing yesterday's stream, I said somewhere around this area that I want to buy Nasdaq, right? I bought it around 850 maybe, when this candle closed right here. I bought it around the breakout of the opening high, which was this was the area. I bought it. I wanted to ride it, but I was not sensing a good momentum, and when this candle was formed, I got myself stopped out. I closed the trade. I chickened out. If I would have not took my profit, it would have been a break-even trade, because we moved our stop to break-even when we formed this high, and it was already more than 40 points, so we moved our stop. It could have been a good trade. The same was the case in Dow Jones. If you look at a 15-minute time frame, this was the point around where we bought at the close. This was the close above this range, and the market opened low, came back, wanted to go low again. It tried with this candle, but it did not work. And when it did not work, it generally tends to do the opposite, so it moves and stormed higher. There were some opportunities to buy up low, prior bar low, like here. There was one here, buy below prior bar low, which were kind of good. There were some that you would say didn't work, but these are not the areas maybe where you would want to buy below a prior bar, because you might see a double top, micro double top around here. If we look at the DAX index on a 5-minute time frame, you would see we kind of shorted here, added to a position around here, and then we took profits some here and some here. Well, it moved another 70 points, 80 points without us, but we're kind of fine with it. One thing that maybe I would want to say is, if we look at the DAX, starting from this candle, we started showing bearishness. Strong close, went above this bar and closed below it. We were already bearish, and then this was the starting of the move. And if you look closely, you would see none of the 15-minute candle went above the high of the previous candle. So that's a strong move. We were supposed to be in the trade for long, we did not. We chickened out. Somehow we made more than 1% and we are happy with it. But there were opportunities to make more, and there will always be opportunities to make more. I highlighted this in the US session live trading as well. I wanted to kind of buy, but I was not there. When I looked at this momentum, I either wanted to buy below a prior bar or at new lows. People generally tend to buy at new lows, seeing a good move. People do want to buy at new lows. Not always, not always. I mean, if you look at the price action, we sold off, and then around the US session we mitigated everything that we did during the open. We came back all the way. Even if you look at the price action, you can say, I mean, I do not want to touch it, but there's a clear buying happening. I do not touch it. There are some learnings. If we are in a strong trend, we get ample of opportunities to buy below a prior bar low or sell above a prior bar high. That we did so in the Dow Jones, even in the Nasdaq, but less in the Nasdaq. Also, if all 15-minute candles high are intact in a selling, that is not a sign to be in the trade. I think this is wrong. That is a sign to be in the trade. That is not a sign to be getting out of the trade, is what we mean here. If we look at the DAX, and if you are already in a trend, I do not want to get out. We should stick and hold our trade. We should not get out. Market follows the law of inertia, and what I mean is, if we are in an up move, it tends to be in an up move, and if something is weak, it most of the time stays weak. We want to buy the strong and sell the weak. And what I mean by that is, if you look at the Dow after the open, it was very strong, and even at the open it was weak, but Nasdaq was super weak when it opened. So if you want to short, you want to short the Nasdaq, and if you want to buy, you buy the Dow Jones. I told the same even during the trading, that if we want to buy, we would buy the Dow Jones. We did buy it, but we didn't hold it. It was a bloody good trade. Also, statistically speaking, there are 20% days which are trending, and while we won't be able to catch the highs and the lows, we want to take our fair share and run away. We want to chicken out. This is it. Let's see what brings today, and I'll see you during the